Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd. materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @Pless. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly the large cap tech stocks like the Magnificent Seven stocks that I trade and follow, as well as the equity index futures like the S&P 500 and the NASDAQ 100. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX and SPY. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is the much more liquid ETF version of that index. And NQ, the NQ futures contract, is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading. The first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. Real-time order, I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis, and for setups. And when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken any number of ways. And depending on the asset, setups can be taken with futures contracts, shares of stock, single options, or option spreads. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Anurag, welcome. Glad you're here. RPG, welcome. Glad you're here as well. I'm sorry I don't understand your comment. First light need offers. Sorry, I don't understand that. Here's my agenda for today, Friday, June 28th. First of all, I want to go over news items, economic data, and events for today. Then I'll go over my positional analysis from earlier today. Then I'll review some setups from earlier today. And then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know. I want to be glad to do that. All right, let's start with economic data and events for today. First of all, the PCE data came out at 8:30 a.m. Eastern Time. That came in, it looks like, in line with expectations and slightly lower than the previous numbers. And then Michigan consumer sentiment came out at 10 a.m. And let me check. I believe that was greater than expected and greater than the previous number. Let's take a look at the reaction to that data. Let's go to Bookmap. Go to the ES futures and Bookmap. This is the ES futures, the S&P 500 futures in Bookmap. This is the reaction to the PCE data, 8:30 a.m. Eastern Time. Initially, a knee-jerk reaction up to right around the 549 level. That was the SPY 549 and the ES 5510 level. Price reversed lower. Found support right around 547 and the ES 5550 level. Started to move higher. This looks like the reaction to the Michigan consumer sentiment. Very bullish reaction up to the SPY call wall. That was also the upper end of the Spotgamma implied one-day move. And we'll talk about these levels and setups in just a few minutes. So again, reactions initially bullish, but turned out to be a bearish reaction to the PCE data, and then a bullish reaction to the Michigan consumer sentiment, and that was also reverse lower. So again, I'll talk more about levels in actually starting right now. Let me check for questions. Hello, Robert. Welcome. Glad you're here. Anurag asks, could you please show how you get your levels on ES, the spreadsheet, and how you import them to Bookmap? So I'll show you for ES. It's the same for NQ. All right, so the levels come from Spotgamma, and so I get those levels from Spotgamma. They're available on the Spotgamma homepage. Let's just take a look at that. All right, so I'll go to these index levels. So here are the SPY levels. Here are the SPX levels. All right, so I add those to a spreadsheet right here. I'm sure this looks complicated, but I use this spreadsheet. So here are the SPY levels. Here are the SPX levels. Note that I have to convert the SPX and SPY levels to equivalent ES levels. So I get those index relationships from a little think script. Here I have in Thinkorswim. So that's showing the ES to SPY relationship, and also then the ES minus SPX. I simply have that on a watch list in Thinkorswim. Hold on, let me get that. So I have that on a watch list. Here's ES minus SPX. Right now it's somewhere between 60 and 61. I'm using 61. So that's how I get the index relationships to show those SPX and SPY levels on my ES chart, show them at the correct levels on the spreadsheet. Then I use this price lines add-on. This add-on is available in the Bookmap marketplace. And here I'm linked to that file, that spreadsheet. All I do is start the server, refresh the levels, and then they're shown on this chart in this column right here. All right, so that's a similar process for NASDAQ. I do post the index relationships that I'm using every day in Discord. All right, so let's take a look at these levels now. All right, so I mentioned key reactions to data. This is the SPY 549 level, also the SPX 5510 level, just below that. So that was reaction before the cash open after the PCE data came out. Moved down to around the SPY 547 level. That is not a Spotgamma level. And before I go any further, I do need to take a look at a larger time frame. I guess I got a little ahead of myself. So let's go back and start with the SPX, underlying index. And then we'll get back to Bookmap in just a moment. So this will provide an overall picture, higher time frame. All right, so this is SPX. Let's zoom in. This is a one-day chart for SPX and Thinkorswim. Let's take a look at the key reaction points for today. This is April 1st. Reversal after a 5-month rally. Rally resumed the Monday after the April expiration, shown by that red line. This is the May expiration. A little bit of a pullback after that expiration. Price resumed higher. Then there's been a bit of a consolidation after the large June call-dominated options expiration, shown here. All right, so often the expirations mark kind of turning points sometimes, or some reaction in the market for several days. All right, let's now take a look at a 1-hour chart. This is the 30-day 1-hour chart. Again, a Thinkorswim. This is the May expiration right here. So a little bit of a pullback after that expiration. This is the June expiration right there. So a bit of consolidation after a move up around that expiration, the June expiration. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. This is based on the closing price for SPX from last Friday. These levels remain in place for the entire week. So SPX has not breached either the lower or upper weekly expected move this week. The dashed blue lines are showing the lower and upper daily expected move. This is also based on the options market. Earlier today, SPX did breach that upper daily expected move and is now trading within that range. Those levels change every day. I do post those levels in Discord the evening before. All right, the dark red lines on this chart are showing the Spotgamma levels. These are based on gamma-weighted open interest. They're provided to Spotgamma subscribers. They're available on a variety of trading platforms. Again, this is Thinkorswim. Let me point out the key daily levels. First of all, 5,300 is the put wall. That's a strike with the largest net negative gamma that can be expected to act as support. Above that is the volatility trigger at 54.65, marked by VT there. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure. That tends to enhance or increase volatility. Above that level, like SPX is trading now, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure. Market makers have to trade against price to hedge their delta exposure. That tends to subdue or decrease volatility, and that leads to more mean reverting price action during the day. All right, so again, SPX is trading above the volatility trigger in a positive gamma environment. Then finally, 5,500 is the call wall. And the absolute gamma strike. The call wall is a strike with the largest net positive gamma. That can be expected to act as resistance. Price did break above that level earlier today, now trading below. That's also the absolute gamma strike. That's a strike with the largest absolute positive and negative gamma. And that can be that is this, again, the strike with the largest absolute positive and negative gamma. Note all those levels remained unchanged from yesterday. And for SPY, the absolute gamma strike did move up to 545. That was the only change for the S&P 500. All right, Katinga asks, is the Think script provided by Spotgamma? How do we access it? I assume you're talking about this Think script right here. And that's just my name, but the way you can get it from Spotgamma, go to the Integrations tab, click on Thinkorswim. You can download it. What I do is I download it, and I select all, I copy it, and then I will go into this every morning, open that up, edit it, and delete everything that's in there, and then paste the new Think script. It takes about a minute, but that will update my SPX, SPY, QQQ, and NDX charts. All right, so you were asking about we'll take a look at the SPY chart in just a minute. So no, those Think scripts are something that I wrote. And I did take a look at the pin icon in the Options-Doug chat channel. You should be able to find those scripts there. And I can post something in Discord later on. All right, so that is a 1 hour chart. And let's take a look. Let's wrap up our view of SPX with a 1 minute chart. This is showing about 3.5 days worth of data, regular trading hours in the dark shaded portion. Price did quickly move up after Michigan consumer sentiment above the upper daily expected move, reverse lower, a little bit of consolidation around the 5,500 call wall, absolute gamma strike. Now price moving lower. And we'll talk about this setup in just a few minutes. I did post this in Discord, just a beautiful, beautiful short, very clearly signaled. All right, let's take a quick look at a SPY 1 minute chart, and Katinga, I'll get back to your. All right, so this is SPY 1 minute chart. Here's the call wall, 550 call wall acting as resistance. And these scripts right here, this is something that I wrote. And then for the ES minus SPX or the NQ minus NDX, I just have that in Thinkorswim. You can put simple equations in a watch list. All right, so 550 call wall acting as resistance right around the cash open 547. That's not a spot gamma level. Around that level acted as support. And now maybe SPY finding support at the 546 level. All right, so let's go back to Bookmap. I talked about the levels in here before. I've identified these. Again, this is my own cloud notes. I showed how I set these up. There's the 550 call wall. That's the SPY 550 call wall. The SPX 5500 call wall. Note there is a big difference in price between ES and SPX. Today it is somewhere between 60 and 61. I'm using 61. So I'm showing SPX 5500 at ES 5561. So again, there's the reversal at 550. Consolidation around the 5500 call wall, absolute gamma strike. Price continues to move lower. And note, I did post this setup in Discord. We'll take a look at that in just a minute. All right, I talked about shifts and levels. The only shift was for SPY. The absolute gamma strike moved higher. Let's move on to NASDAQ. Similar pattern. So this is the NQ futures and Bookmap. And let's go quickly to the underlying index charts. Here's QQQ. Let's take a look at the levels in play for QQQ. And for QQQ, there are a couple of combo levels in play. Here's this 481.55 combo 1 level, combining QQQ and NDX. Gamma weighted open interest into one level. Combo 1 is being the most important. Around that level acted as support earlier today. That's just below the 482 level. Here, this combo level, this cluster of levels here, 486, combo 2 level in between, and then the 487 acting as resistance. Note also 485 is a large gamma 4 level. Those are the gamma levels in play. And now QQQ barely trading above the 481 volatility trigger. And for QQQ, there was a bullish hat trick. The volatility trigger put wall and call wall all shifted higher. All right, let's take a look at NDX. Then we'll get back to Bookmap NQ. NDX, the underlying index. Looks like today NDX levels definitely in play for today. The 19,800 level. Support just after the open. Price moved up to this 2,000 level. That's a large gamma 2 level. And then a 20,000 large gamma 2 level. And then 20,007 C4, those two levels acting as resistance. Back down to this opening level now, right around the 19,800 level. All right, so let's go back to NQ. So again, I have my own cloud notes, so I can show QQQ levels. There's that combo 1 level. NDX levels, there's that 19,800 level. And then this cluster of levels up above, 20,000, 20,007 acting as resistance. Here's the upper daily expected move for NQ. All right, so again, very similar pattern to the S&P 500. Down after PCE data, up at the cash open, accelerate at Michigan consumer sentiment at 10 a.m., and then reversal right around 10:15. So again, we'll take a look at setups in just a minute. All right, let's wrap up. Wrap up positional analysis by taking a quick look at gamma notional. This is market makers' position on the gamma curve at the beginning of the day for the S&P 500 and NASDAQ. Note all these numbers are positive. In a positive gamma environment, Spotgamma assumes for an index that traders are short calls, market makers are long calls. Since the positive gamma, they have to trade against price additive delta exposure. That tends to lead to mean reverting price action. Note, with the exception of SPX, all these numbers moved higher from yesterday. SPX moved slightly lower, but still all positive. All right, so that is positional analysis. Levels working well today, the Spotgamma levels. Now let's move on to execution. Let me zoom out. All right, so the levels that we've looked at so far, that's based on static data, gamma-weighted open interest, that's updated once a day. Now let's move on to execution, real-time data. As always, I'm going to start with by taking a look at what options traders have been doing today. And I'm going to start with the S&P 500. So this is the HIRO signal, HIRO, Hedging Impact Real-Time Options. This is available to Spotgamma subscribers. I'm going to start with the S&P 500. There are two signals that we can take a look at for the S&P 500. This is the first. This is the index signal. What this chart is showing is options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures, all into one combined signal. So that is the index signal. There are two lines on this chart. The white line is price for SPX, and the purple line is the HIRO signal. Again, hedging impact real-time options. A rising HIRO signal indicates traders are taking positive delta positions. They are buying calls and or selling puts. And a falling HIRO signal indicates they are taking negative delta options positions. They are buying puts and or selling calls. All right, I'm going to take a look at the other signal that we can take a look at for the S&P 500. Then we'll zoom in on this chart. So this is the index signal. This is the equity signal. This signal is typically less noisy than the index signal and often more clear. So this is the signal that we'll take a closer look at. What I'm going to do is I'm going to zoom in. All right, so just to clarify real quick, this is the signal that's showing options trades and market maker hedging activity for all 500 stocks in the S&P 500 index. So that's the equity signal. I'm going to shift to puts and calls. I'm going to go back to the S&P 500 signal. We'll take a quick look at that. And it's really important if you're trading the S&P 500 to look at both of these signals. So let's take a look. There was a long setup in the morning from the open, and then a very nice reversal lower. That's what I posted in Discord. We'll take a look at that in just a moment. Actually, let's go ahead and let's wrap this up. Then we'll take a look at the what I posted in Discord this morning. All right, so this morning I have shifted to puts and calls. This is the index signal. So what this chart is showing is traders are buying calls. That's shown by the rising orange line. And as price approached this Spotgamma implied one-day move high, that is calculated separately from the daily expected move differently. That's based on gamma levels rather than the more traditional upper and lower daily expected move that I post. All right, so note price reversed right at that level. That's when options traders stopped buying calls, started selling calls. Note the flow alert that came in just as the signal reversed, signaling significant options activity. And these signals, especially on the S&P 500, can often act as mean reverting signals. Traders buying calls, nice long setup from the cash open, accelerates after 10 a.m. data release. You can see the price action levels off. And then both the call line and price accelerate up until about 10:15. When traders stop buying calls, start selling calls, price reverses lower. Note at this point, traders are selling calls and buying puts. That's a very powerful directional indicator. When both signals move lower, that's very bearish. So bullish setup with call buyers in the morning. We'll take a look at Bookmap in just a moment. And then a short setup right around 10:15. Key level to watch on this chart, again, the Spotgamma implied one-day move high. Price reverse right at that level. All right, let's go to the equity signal, and then we'll go to Bookmap. Long setup in the morning. Traders aggressively buying calls and stocks. Signal levels off. Remember, the index signal had already shifted lower, and then right around 10:45, 10:50, the equity signal shifts lower. Price moves lower. So we'll go back to Bookmap now, go to the S&P 500. Let's zoom in. So we're looking at data from about 9 to 12 Eastern Time. Here's the reversal higher at the cash open. The volume dots in Bookmap are showing market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. So there are aggressive sellers on the way down. Sellers are exhausted. Buyers come in. You can see all the large green volume dots. Rising cumulative volume delta, that's shown by the dark blue line. Then after the 10 a.m. consumer sentiment data, sharply rising cumulative volume delta. The yellow line is showing that buy stop orders were fueling the move higher. And price moves up to the two key levels that you expect to act as resistance. The first, that Spotgamma implied one-day move high that was shown on the index chart, Hero Index chart, and then the SPY 550 call wall. Price was already above the 5,500 call wall, so you expect that to act as resistance. Price makes a series of lower highs. Price moves lower. Anurag, at what time would you take the short? So it depends on how you're taking the short. I think let's say you're selling a call spread, I think anytime from 10:30 on, anytime around 10:30, that lower high right at 550, So if you're trading SPY, maybe a call spread with a 550 short, or if you're buying a put spread with a 550 long, actually a short too. So either one, selling a call spread or buying a put spread. If you're trading futures contracts, I'd probably wait for this next lower high when the equity signal. Remember, that's when the equity signal started to move lower. So if you're trading a leveraged futures contract, probably better to wait for final confirmation, a reversal below the ES upper daily expected move. So it depends on how you're trading it, how much leverage you have, and how much confirmation you want to wait on. All right, here's what I posted in Discord, and I did post this at 10:41. So first of all, this is Bookmap. Again, I took the screenshot a little bit earlier, already recognizing the setup, but it took me a while to get all the screenshots and post them. So I posted this in Discord at 10:41. So, and I also posted these. This is the reversal. This is the index chart. Reversal at just almost to the tick at this 1 day implied move high. Traders start selling calls. Orange line, blue line moving down. Flow alert comes in. No, there was plenty of time to take a short. All right, so this is the index signal. And I also posted the equity signal that's shown here. So initially this reversal lower was a little bit more clear in the index signal. But at that same time, 10:15, call buyers and put sellers took their foot off the gas. All right, so that's what I posted in Discord. Now let's zoom out. All right, so Anurag, I think, given the magnitude of the move, I don't think it mattered very much where you got long as you short, as you know, that's just depending on your comfort level, your how you set your stops, how you set your price targets. For me, if I was trading futures, this would have been the safest entry point right there, that break below the upper daily expected move, as all signals were moving lower. So let's say you got short at 55.75. And that was good for almost a 40-point move lower. A little bit less, somewhere between 35 and 40 points move lower. And then, again, I did post this in Discord at 10:41. All right, so that's the S&P 500. Let's take a look at NASDAQ. Then we'll get to some stocks. So NASDAQ, very similar signal. I think the lower highs were more clear here in NASDAQ. Much steeper move up, steeper drop down. Let's take a look at Hero, see what options traders are doing. So just like the S&P 500, there are two signals that we can take a look at for NASDAQ. I'm going to start with total. Let me show you quickly what these signals are. So this is the index signal for NASDAQ, combining options trades, market maker hedging activity for NDX and QQQ. Note how as price was moving up, the Hero signal was flat this morning, then reversed lower right around 10:15. All right, so that is the index signal. There's also this equity signal. This is for the Mag 7 stocks, Magnificent 7 stocks, known as the Magnificent 7. It's showing options trades and market maker hedging activity for all 7 stocks in the Magnificent 7: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Very similar to the equity signal. Sharp move higher. Traders take their foot off the gas right around 10:50, 10:45, 10:50. The signal reverses lower. All right, so looking at a combined signal of both is what provides the most information. So let's zoom in on this. I'm going to go back to the equity signal. Actually, let's go to the index signal. So this gave the first clue for the move lower. That reversal in the call signal. So at this point, orange line, call line, blue line, put line moving in the same direction. Very powerful bearish signal. And then the Mag 7 signal provided the more clear signal in the morning. Traders aggressively buying calls up until about 10:15. Take the foot off the gas. Start selling calls. Start buying puts. Let's take a look at Bookmap. Cash open. Aggressive buyers come in. Rising cumulative volume delta. Note large traders were fading this move with iceberg orders. That's shown by the falling blue line. Just before 10:30, cumulative volume delta and the stop line shift lower. You can see the aggressive sellers starting to come in as price makes lower highs. Shift from all green volume dots on the way up to almost all magenta volume dots on the way down. And finally, price makes it all the way down to the NQ 20,000 level. That's also this combo 1 level. All right, so that's NASDAQ. Let's go back to Hero. Mag 7 signal. And it looks like right around 12:40. Traders stopped selling calls, stopped buying puts, started selling puts. And now price is consolidating. Remember, this is a positive gamma environment. All right, let's take a look at some stocks. First stock I want to take a look at is AMD. Note AMD, 165 call wall. Rising orange line. Traders aggressively buying calls. Market makers sell the calls. They have to buy stock to hedge their delta exposure. Initially, they were selling puts. And as price made it up to this 165 call wall, they stopped selling puts, started buying puts. They also stopped buying calls, started selling calls as price made it up to the 165 call wall, and then price reversed lower. Took their foot off the gas about 11:45. Now price consolidating. Very clear picture in AMD. Bullish options trades up to the call wall, then reverses. Options traders reverse as price makes it up to the call wall. Let's go to AMD. Here's the 165 call wall. AMD makes a lower high as options traders shift to negative delta. Options traders now have taken the foot off the gas, price consolidating around 162 to 163. All right, so a couple of ways to play that. If you like to play the opening, very bullish setup, a lot of green volume dots, aggressive buyers coming in, price trading above VWAP, reaches up to the 165 call wall, actually up to the 166 level. Price starts to reverse as options traders stop taking positive delta positions, start taking negative delta positions, and then price reverses lower. So early in the morning, a nice long setup, and then later short setup as options traders again reversed from positive delta to negative delta around the 165 call wall. All right, the next stock I want to take a look at is Amazon. A somewhat similar pattern here in Amazon, but the move lower is much bigger. Amazon has been pretty strong the last few days. Looks like traders taking profits. Let's see what options traders have been doing in Amazon. Go to Amazon. So really it didn't take long for options traders to start taking negative delta positions just after 10. So there was an initial push higher by call buyers right after the actually they started before the 10 a.m. data release. Then price reversed lower. Traders started selling calls, started buying puts. Price moved lower. There were several flow alerts here. In this case, acting as a nice mean reverting price signal. So right around, again, 10:15, traders start taking negative delta positions, selling calls and buying puts. Price moves lower. Traders taking profits after the big move up this week. Let's go back to Bookmap. Trend break lower. Price moves lower as traders take negative delta options positions. And note, this is the market pulse price change indicator that I'm showing in the subchart here. That's this oscillating line. Again, this is market pulse price change. And these price change extremes can often help you to find the deeper pullbacks, entry points in the direction of a trend. So the trend is down after the break right around 10:15. So I would be looking at these bright green levels, deeper pullbacks for short entries. Price targets at higher liquidity levels. These are limit buy orders that come in for stock typically right at the cash open. They typically remain in place until they're filled. So limit buy orders below price act as a magnet for price. All right, the next stock is ARM. 170 is the call wall. Oops. Very nice reversal. Price did break above the call wall briefly. Reverse lower, trend break, break below VWAP, shown by the light blue line. Let's see what options traders are doing. Go to ARM. 170 call wall key gamma strike. And options traders were initially buying calls and selling puts. That reverses right around 1015. Trend break, price breaks lower. Blue line, orange line moving in the same direction for about an hour from 1015 to 1115. And price reversed lower. Options traders took their foot off the gas right around 1115. Price consolidates. So move up. Reversal at the 170 call wall key gamma strike. Price moves lower. A number of ways to play these reversals that I've mentioned before. You could sell stock or buy puts, sell a call spread, buy a put spread. So again, a number of ways to play these reversals. And if you buy a put spread or sell a call spread, all you're saying is whatever level you put your spreads at, all you're saying is price has to remain below this level at the end of the day. If you're trading in this case, it would be a 0 DTE trade. If that's what you're trading, all you're doing is saying price has to remain below this level at the close, and I'll take full profit on my spread trade. All right, let's go back to Bookmap. Arm again, nice trend break. Right below the 170 call wall key gamma strike. Market pulse price indicator marking the deeper pullbacks for short entries. All right, the next stock I want to take a look at is Meta. Kind of an up and down morning in that Meta, but resolving lower. Let's see what options traders are doing in Meta. Meta's another stock that was very strong earlier in the week. Initially, from the open, traders are selling puts. That was from about 9:35 to 10:25. Then right around 10:25. And also note, just after the Michigan consumer sentiment, traders had initially been selling calls. They start buying calls. Price moves higher. 10:25. Traders stop selling puts, start buying puts, start aggressively selling calls just as aggressively as they were buying. Price moves lower. Blue line, orange line moving the same direction. In the morning after 10, they were moving higher, and then after 10:25, moving lower. Then right around 11:15, 11:30, take the foot off the gas, price consolidates. All right, Anurag says the problem with Spotgamma chart is that it is so close to the end of screen, so we don't know when the signal is changing direction. Well, first of all, I am looking back in hindsight. So let's see how we could. I think I've already pretty clearly shown how that could have been resolved, or what information you could look at for the S&P 500 that would help you to make that decision. First of all, the S&P 500 was approaching two levels that you expect to act as resistance. Again, the Spotgamma one-day implied move high, you expect that to act as resistance, and the SPY 550 call wall. So I'm already looking for those levels to act as resistance. And then the hero signal just confirmed that. And there was plenty of time in the S&P 500, probably, we'll take a look in just a minute at the S&P 500. You probably had in a half hour to find a good entry point for a short. for 30 plus point move lower in the S&P 500. So it is combined by looking at these levels and looking at the Spotgamma chart. So let's go back to one that was, let's go back to ARM. Let's zoom in on the morning. All right, so I'm looking at ARM. This is kind of a weak hero signal moving up. So this is right around 10:30. I'm looking at this. I see price moving up to the 170 call wall, key gamma strike. I expect that to act as resistance. And after this sharp move up higher with the call line, I see the call line starting to move lower and the put line starting to level off. Then the sharp move lower. And that comes actually right after ARM broke below the call wall. So I'm looking at this on one screen, looking for signs of resistance at the 170 call wall, looking for signs of a reversal. Let's go back to Bookmap, go back to ARM. Sorry. We can zoom in. All right, so that's the clues in the hero signal. So I've got this trend line drawn. Let's see if we can clean that up just a little bit. Yeah, that's pretty good. Trend line drawn. All right, so watching, here's the 170 level that I expect to act as resistance. Quick move up. Looks like sellers are exhausted. If I had the absorption and sweeps order indicator on there, that would probably be a sweep up. I see aggressive sellers start to come in. And I'm just going to buy a put or sell a call spread, buy a put spread. Don't have to worry about precise entry if that's what I'm trading. And all the clues are there. Cumulative volume delta starts to move lower. All right, so I'm not, Anurag, I'm not looking at the Spotgamma chart in isolation. I'm looking at levels and reactions in Bookmap and in Spotgamma, all for my setup. All right, let's go back to Meta. Take a quick look at Hero. Go back to Meta. All right, so I think, again, looking in hindsight, pretty clear reversal here. Price trading above the 520 key gamma strike. I think the reversal lower is pretty clear here. Call signal shifts pretty abruptly right around 1025, 1026. Shifts from up to down pretty sharp. Blue line, put line, flattens out, then shifts lower. So if you wanted to wait, price breaks below the 520 key gamma strike, retest that level. So again, depending on how you're trading, just buy a put at that level. Sell a call spread, buy a put spread, and you have a nice profit. So I think the signal here is pretty clear. And let's wrap it up. Let's take a look at NVIDIA. Not quite as clear here. NVIDIA, traders buying calls in the morning no level to clearly act as resistance. Flow alert comes in. I think the bullish setup in NVIDIA was more clear today. Traders buying calls, selling puts, and it just kind of flattens out right around 10:30. Price consolidates. So this is just a case of call buyers taking the foot off the gas. Let's take a look at NVIDIA. And then we'll call it a day. And in this case of NVIDIA, not quite as clear as ARM, for example. Traders, call buyers just take the foot off the gas. Price versus lower. Really good for the long setup was a little bit more clear in the morning. Traders aggressively buying calls. Also, you can see all the green. Sorry, I keep getting the wrong tool. You can see the reversal, green volume dots coming in, break above VWAP. All right, Anurag, I hope that answers your question. All right, everyone, my time is up. I want to thank you very much for watching. Thank you for your questions and comments. Have a great weekend, and I will see you on Monday. Thanks again. Bye.